Yo, what up everyone? In this video, I want to review two different trades that I took, along with some trades that we took in my Discord community. And I'm going to go over some important lessons and tips that helped me out. And I'm confident that these lessons and tips we can use to improve for similar situations that we might encounter with market context in the future. But before we get into the trades, all I ask is if I provide any value to your trading, I would appreciate a thumbs up on this video. And if you haven't already followed me on Instagram at Ameritrade, I'm going to post a link to follow it in the description below. I post daily trading recaps on here, along with very good trading tips and tricks that I guarantee you aren't going to find anywhere else. The link is in the description below. You're definitely missing out if you're not following it. But now let's get right into this video. So obviously, for me, the best trades come from being bearish at supply or being bullish at demand. Our job as traders is trading on the same side as whatever participant is showing the most effort and the one that is getting the most rewarded in the market. For example, bearish at supply, we look to play a bearish position, and we also look to play a bullish position at demand. It's how the market works and how I take the best trades. However, sometimes if aggressive sellers outweigh buyers inside of demand and sellers find value at lower prices, the market may continue to move lower and vice versa for the upside. If aggressive buyers find value inside of supply, usually means that the market will going to continue to move higher. It's a supply-demand equation. When there is more aggressive buyers than sellers at supply, the market's going to move up, and vice versa for the downside. Demand exceeds supply or supply exceeds demand. These things do not happen too often, especially at key supply or demand zones, but this is where market context comes into play. And on Thursday, February 17th, we found no buyers at demand and the market continued to sell off. So the first thing I want to get into is the pre-market plan. I post these every single day in my Discord of the setups I'm watching, levels I'm looking out for, and potential trading scenarios. The Discord is available and included only for Ameritrade members. So the first one was on the S&P today. You all know this is my favorite instrument to trade, and I said it's a very simple plan. Yesterday's action bring us more information. We are going to remain on balanced conditions. If we trade between the 4471, 4483 supply zone, which is the pink box up here, you can see yesterday we rallied into this and rejected, and actually overnight rejected it pretty perfectly. So that was our upper range, and our lower range was the 4440 demand zone. And I said we have a slight lean towards the bear side as bulls are really not proving much. So this is where market context really comes into play. Let me zoom out here. So understanding the market participation, understanding buyers, understanding sellers, and kind of the overall theme that the market, or the way I look at it as the current chapter that we're reading in the market. We are the storytellers and the market is telling us the story. We have to comprehend it. We comprehend it to make valid trading decisions because we take what the market gives us. So every rally we've been seeing into the market has been failing. We get a rally into supply, we fail. We move back lower, come back into it, fail. Demand zones have been really not reliable as buyers aren't really proving to be aggressive. Buyers are failing to accept higher prices. And every time we come back down to test those buyers, they really don't show up. They aren't showing effort and they really haven't shown up to begin with. On top of this, volatility in the market has been lacking, and we've been breaking through demand zones pretty easily, especially last week when we hit the supply up here and aggressively sold off for 2 days and validating a bunch of demand zones. So we have to continue with this context. It's healthy and it's okay, but some days it really doesn't provide clean short entries to the downside because of the lack of volatility where it's clear and really high quality in my opinion. So going back to the pre-market plan from today, my scenario was if we fail to find buyers at the 4440 demand, we will test yesterday's lows at 4423, and a strong aggressive break below these levels will bring us a sell-off where I'll be looking to play puts into the 4408 demand. So overnight, we really failed to bounce at this 4440 demand zone that was created the day prior from this rally, which failed at supply. Overnight, consistent lower lows, consistent lower highs. So we obviously had a bearish overnight action, considering we were failing at this 4483 supply zone that failed 3 different times after it tested it. And buyers really, like I said, failed to prove themselves. And right before the market opened up, this consolidation area right here was considered, if we got a drop at the market open, would have formed new supply. So I had the context that supply was possibly forming inside of demand, which basically states that sellers are accepting prices lower and buyers are nowhere to be found at a demand imbalance where buyers once were found at an existing price point in the past, the day prior to that, for this example. So I had the context that supply was possibly forming. The market opened up, and for 15 minutes, sideways action, no clear direction. And in my opinion, you are gambling when there is no direction. We are moving lower into the zone. I do not like when that happens, and really failed to find buyers. I'm going to go to a 1 minute chart here so you can see the entries a little bit better. I posted my fills, my entries and exits in the Discord if you want to go back and review them. But at 9:47, I played the SPY 440 puts, and my stop loss, show you what it looked like. My stop loss for this trade was above this high at 4436, targeting the 4408 demand zone. The confirmations for this trade was possible new supply forming in demand, the context that demand zones haven't been reliable, the context that we rejected supply overnight, and from the pre-market plan, like I said, if we fail to find buyers inside of this demand zone, we have a strong aggressive break. I'm going to be looking to play puts into the 4408 demand zone. Now the problem, or not really a problem, was we really didn't find buyers in this demand just yet, but we still were above the previous day's low. And I was very cautious of a potential lower day fake out. It's a major trap for a majority of retail to get short. High a day, low a day, or any previous high or low are very key reference areas because everybody could draw them, everybody could spot them out, and the market's designed to take money from the weak traders and reward the traders that have the most patient hands and trade in a smart manner. So now I'm in this position. I have puts. I was expecting a little more volatility in the market, which is why I traded these options. They were about maybe one out the money at this point, and I'm really trying to get this 4408 zone, and then the market starts selling off. And just to protect myself, around 4414, I exited 50% of my position after that quick sell-off to the downside. It was about a 12-point sell-off. Just to protect myself, because of NASDAQ at this time didn't break below demand just yet. We also had a bearish NASDAQ scenario, but NASDAQ didn't fully break below demand, and we were going to test the previous day's low, and it looked like, or we did actually bounce after breaking the low of the previous day. Like I said, it's a major trap for retail, and that's a sign of potentially to cover your short position or watch out, because if we break a low and fail to stay below the low, it's a sign of responsiveness from the opposing participant. And then as we continued to sell off right near this 4408 demand zone where we tried to find some buyers, I exited another 40% of my position. I'm out 90% at this point. Again, just to protect myself, I was going to consider this trade a scalp. I wasn't expecting the velocity of the sell-off, but how I take my trades is I always leave a couple contracts in case the market wants to continue selling off or rallying in certain scenarios. So at this point, I'm in 10% of my position, and I held, yeah, we hit this 4408 demand zone. Yes, we could have bounced, but with the previous context that I explained earlier in this video, and with how weak the NASDAQ was too, and underlying equities, Apple, Amazon, Facebook, Microsoft, I was confident that really sellers had control and bounces should have been met with selling, especially with NASDAQ failing to find a bid and continuous lower low, lower high sell-off. We never made a higher high and we never made a higher low intraday on NASDAQ. The S&P tried to find a bid off this 4408 demand zone, and guess where we found resistance? I'm going to go to a 5-minute chart. Found resistance right at the previous day's low. We broke the low, came back into it, and 4423 acted as what was old support, yesterday's lows, acted as resistance, hit it perfectly. And I'm not going to lie, my contracts were down about 30 cents at the highest point after this bounce off demand. But the way I do it is I set myself up to play with house money. It's like protective gambling almost, that once I protect myself after selling some of my position, in case the market wants to continue to sell off, I'm only in 10%. If this thing wants to rally and I get out, maybe where I entered, I might lose 40 or 50 cents on my remaining 10%. But that trade can never ever go red on me. It's how I make my winners, how I stretch my winners out as best as I can and most efficiently if the context and if the scenario makes sense. Eventually we start to sell off, and the same scenario I said earlier, not finding buyers inside of demand, every rally out of it failed. You can see we tried to move out of it, failed. Tried to move out, failed. Same thing right here. Lower lows, lower highs, no reason to panic. We had full control from sellers. And around 250, right when the market looked like this, I got out the remaining contracts, the remaining 10%. And as soon as I sell, this thing continues to sell off. Could have made another $1.20 on my position. But the point I want to make here is I don't see these setups that often. And to be honest, I lose more often than not trying to take a setup like this because I force it and it just is kind of against what works for me the best. So yes, this trade worked out. Yes, I made money off of it. But I tend to lose more often than not taking setups like this because I tend to think it's going to happen rather than it actually does happen. For example, yesterday we had the same exact analysis. The pre-market plan, we had demand in this area right here to the lows, and I was watching a break out of this demand. I mean, this chart looks identical, right? This is Wednesday's action, February 16th. I took it short below this demand zone, or not right below it, but inside of it, targeting this 4408 demand zone. The same setup that we took on Thursday, I took on Wednesday, but Wednesday it didn't work out. I played puts, took a short here, and the market eventually, consolidated. It failed to continue lower below that demand zone, failed to hit that 4408 demand zone. We were speculating that a break below that one that I just drew out was going to bring it into the 4408 like it did today, but it failed. And then we got that rally off that news into supply. So that setup that worked out today did not work out the day prior to that. It goes to show you that, like I said, more often than not, I try to force setups doing it this way than actually taking a high quality setup because of it. And because of that, I see a lot of traders having FOMO, or they feel like they're missing out on it because they see it. We had a crazy move. And how I respond to that is trade your edge, trade on what you know works for you. If you plan something out and it works perfectly, or if you didn't plan it out and you see other people taking a good trade off of it and making money, you now feel left out. You have FOMO, and that's the wrong thinking. No one knows what's going to happen next in the market. Did I know we were going to have a sell-off like this today? Absolutely not. No one knows what's going to happen, but I played my levels. I see what price does at my levels, and I manage my risk accordingly, and I put a trade on. If you took a trade according to your plan like I did, great. But if you took a trade because you saw other people taking it and you had FOMO, that's really bad. There's going to be plenty of opportunities in the market. FOMO mentally affects your next trades, and it subconsciously affects your trading decision making. It's like adding fuel to a fire. It's never going to end well, and we have to make our headspace as clear and healthy as possible in order to achieve success. A lot of traders think, this is key right here. This is actually probably one of the key points of the video. A lot of traders think as soon as we break below demand, we have to get short. In my opinion, it doesn't work out like that all the time, and you're chasing at this point, right? Take it somewhere where it makes sense, where we're not finding buyers or you find sellers. Yes, you could have took it when we broke below demand, and yes, it could have worked out, but just because we break below demand, for example, in this case right here, this doesn't make it okay to play puts just because we break below the low of a demand zone. You got to use more clues than that other than breaking a low. It's like playing a high a day or a low a day break. The chances of it working out are very slim because it's very simple. It's an easy trap for majority of traders. Here's that level from yesterday's support, which acted as resistance today on that rally. Hit it perfectly. Start to sell off from that. But yeah, that's pretty much it. Those are the main points I want to make. Don't play puts just because we break below demand. Setups like this don't occur that often. I really don't consider them, the highest of quality in my scale. It worked out today, but the day prior it didn't work out. And the same exact setup, the same exact context. That goes to show you how unstructured the market is and how nothing is going to be the same. The only thing we can do as traders is not trade off of emotions, manage our risk, come up with our levels of interest, and trade and react to what the market gives us. But if you learned something from this video, drop a like, comment if you have any questions, and check out the links in the description below. I offer a very in-depth and educational course that will come with access to the Discord at no extra charge. I do plan on raising prices very soon, so take advantage of the valuable education. But I'm ending it on that note. Peace out.